This is your LMAX exchange technical update for Tuesday, August 16th, 2016. Euro dollar. So the euro continues to flirt with the 100-day moving average, but has been unable to establish above the longer-term moving average. Until it establishes above that moving average, the pressure remains on the downside, and there's risk for another topside failure ahead of the next major drop down towards next key medium-term support at 109.12. A daily close above 100-day moving average, which now comes in around the 112.25, 112.30 area, would be required to shift the focus back to the top side. Sterling dollar. So cable continues to trade lower and is now within a stone's throw of that 30-year plus 30-year low that we saw back in July, just under 128. At this point, look for deeper setbacks below 128 to expose the next major psychological barrier at 125 further down. Only back above recent highs that we saw all the way up at 33.72 would take the pressure off the downside. Dollar yen. So dollar yen remains confined to a well-defined downtrend and is in the process of what looks to be a bearish consolidation ahead of the next downside extension towards a retest of those recent 2016 and multi-month lows from June at 98.99. Only back above a recent high at 102.65 would take the immediate pressure off the downside. Euro Swiss. Euro Swiss continues to chop around, and at this point a break above 109.45 or back below 107.78 will be required for clearer directional insight. Aussie dollar. So Aussie gains have stalled out in recent trade, just shy of the 2016 high at 78.35. Those gains have stalled out at 77.58 ahead of this latest minor pullback. But there is risk for a topside failure here, a more significant one, with deeper setbacks over the coming sessions. Ultimately, we would need to see a breakdown below the 74.21 area to take the immediate pressure off the top side. But again, there is signs of the market putting in some form of a top up here, stalling out ahead of the 2016 high. Dollar CAD. So dollar CAD has seen some impressive setbacks in recent trade, though ultimately the market does look like it's carving out a major base, and any setbacks from here should be limited to the 128s ahead of the next major upside extension back above the recent highs that we saw going back to the 27th of July, which come in at 132.54, 132.55. Kiwi dollar. So Kiwi gains have stalled out by 2016 high at 73.41, and it looks like the market could be in the process of rolling back over. We would need to see a break below the recent low from the 8th of August, which comes in at 70.87, to strengthen this outlook and accelerate declines. SPX 500. So another record high for the S&P 500, with the market now trading just shy of psychological barriers at 2200. At this point, there's risk for a push above 2200, though overall the market is looking a little bit stretched and we could see a correction sooner than later. Initially, support would need to be taken out down around 2171 to strengthen this outlook, while critical support now comes in at 2147 further down. Gold. So gold has been chopping around in recent trade, but overall the market is confined to a highly constructive structure, with any setbacks seen limited to the 1300 area ahead of the next major upside extension beyond the 2016 high at 1375 and towards the 1450 area further up. At this point, only a close back below 1300 would compromise the constructive outlook.